Weekend profits, a smart strategy for stock and options trading. In our previous video, we illustrated how a modest 2% monthly enhancement on core holdings like QQQ can build substantial wealth over time through the power of compounding. Today, we introduce the Weekend Delight strategy. This method uses weekly options and extended hours trading to generate reliable gains while maintaining a well-structured tail-end risk protection framework. Moving from reactive to pre-planned trading. Traders often operate reactively, buying and selling stocks based on sudden news or short-term price swings. Think about how the average person buys a stock. They see a headline, notice the price moving up, and hit the buy button at whatever the current market price happens to be. This is what we call inopportune trading. In this situation, you are at the mercy of the market's immediate mood, leaving little margin for error. We prefer a pre-planned approach. Instead of chasing price, we use weekly options to set our own terms. To illustrate this approach, imagine you want to buy a stock trading at $100. Instead of paying full price, you sell a put option at a $98 strike. By doing so, the market pays you a put premium upfront. If the stock stays above $98, you keep the premium as profit. If it dips below $98, you buy the shares at that price. Because you already received the put premium, your effective cost is lower than $98. In this way, you enter the position at a discount compared to other market participants at the same time. One important caveat is that the stock price could drop much more than expected. For this reason, it is always advisable to buy a protective put to hedge the short put sold. This step is critical for controlling downside risk. We update this video series periodically, so make sure to subscribe to this channel for regular updates. Channel subscribers can email us at qeinvesting@gmail.com to request unlisted private videos or playlists at no cost. The core pillars for this strategy: EXTO and liquid weekly options. The Weekend Delight strategy relies on two major market developments that have significantly leveled the playing field for individual traders. The first is EXTO eligibility. As U.S. markets move toward a 24/5 trading environment, extended hours access is becoming increasingly important. Traders must use a brokerage platform that supports extended hours trading. In addition, EXTO trading must have good volume, so the bid-ask spreads for the stock price are tight. Interestingly, individual traders have a unique advantage here. Most professional money managers are legally restricted from trading client accounts outside regular market hours. This gives individual investors a valuable window of opportunity while big money is sidelined. The second pillar is the availability of weekly options. In this strategy, we only use stocks with active weekly options to ensure tight bid-ask spreads on options prices. Liquidity in the options market is not optional. It is an essential requirement. The 4 steps of the Weekend Delight strategy. Step 1. Stock selection for the weekend strategy. The process begins with careful stock selection. Even though we are not going to hold such stocks as long-term investments, we still prefer stocks with solid underlying fundamentals. Ideally, the stock should be trending slightly upward or moving sideways. We avoid stocks that rocket upward rapidly or volatile duds that are moving downward precipitously. In addition, we look for stocks with higher implied volatility, commonly referred as IV. Higher IV increases the time premium collected when selling options. Simply put, higher volatility pays more to options sellers on both calls and puts. Step 2. In week 1, we want to get options premium with reduced risk. During the first week, we focus on building income positions with protection. Protection is critical, as one unprotected loss can erase the gains from many successful trades. At this stage, we sell calls and puts to collect option premium while simultaneously buying further out calls and puts for protection. Depending on your options approval level, you may need to own the protective options before selling the like-kind options. This spread structure clearly defines maximum risk from the outset. Unlike many conventional strategies, we prefer to sell near the money or at the money options on proper days in the week, typically after Tuesday. This is because we do not mind owning or shorting the stock if assigned. Near the money and at the money options carry much higher premiums than other out-of-the-money calls or puts. Because stock price can swing rapidly near the market close and after market on Friday, sometimes it is difficult to know whether options will be assigned or not. Fortunately, both outcomes are generally favorable to the option seller under this strategy, particularly if the protection strategy is properly implemented. Step 3. The weekend adjustment. By early Saturday morning, you will know whether your positions for this stock are long, short, or net neutral. Your account may temporarily be out of balance, but your brokerage firm will allow you to adjust positions before the market closes on Monday. This is also the time to reassess whether the original thesis still holds. If adverse new information emerges over the weekend, we can still abort the plan. A smaller loss can be the best loss. If you choose to stay the course, extended hours trading allows you to adjust the number of shares before the regular market opens. We typically retain a modest positive bias and may own 50 to 100 shares, unless market conditions suggest otherwise. While we generally prefer not to short stocks, there are occasions when shorting is appropriate and can be very profitable. One practical note: stocks typically cannot be shorted during EXTO hours. To prepare for potential short exposure, traders must plan ahead by selling in-the-money calls before Friday's close. This allows short calls to be assigned and therefore creates a short stock position. Step 4. Now is week 2. We need to extract the additional edge. In the second week, the goal is to complete the trading cycle. You may choose to close the position and lock in gains or losses on Monday, or you may continue to trade the same stock based on the then current price and volatility. At this stage, risk control becomes even more important than in week 1. We do not want emotion to interfere with proper decision-making. It is important to note that realized volatility eventually catches up to implied volatility, which is the expected volatility. Premium collected from short options could be clawed back if protection is not properly maintained. Therefore, if you choose to continue beyond week 2, vigilance in managing tail-end risk must take priority over premium hunting. At this stage, discipline matters more than opportunity. We will provide more information in other Quantum Edge videos. Avoiding common mistakes. Whether trading during regular market hours or extended hours sessions, success depends as much on what we avoid as on what we do. The Weekend Delight strategy is specifically designed to address several common mistakes that derail many traders. Lack of training or experience. Trading without proper knowledge often leads to poor decisions and unnecessary losses. Education and preparation are not optional. They are the foundation of consistency. We provide several videos related to this topic and hope that they are helpful to the channel subscribers. Lack of patience. Many traders expect quick gains and immediate results. This mindset encourages overtrading and impulsive decisions. The Weekend Delight strategy emphasizes process over speed, allowing time decay and structure to work in your favor. Being greedy, chasing unrealistic returns often leads to excessive risk-taking. Greed pushes traders to oversize positions, remove protection, or hold trades too long. Sustainable results come from disciplined execution, not from trying to extract every last dollar from a trade. Overconfidence. Ignoring risk management is one of the most costly mistakes in trading. Even well-structured trades can fail. Protective options, defined risk structures, and position limits are essential safeguards that keep a single adverse move from undoing weeks of gains. This is exactly what the Weekend Delight strategy is designed to achieve. Closing thought. The Weekend Delight strategy offers multiple structural advantages for individual traders. It is not about predicting stock prices with precision, but about preparing a process. By planning trades in advance, defining risk clearly, and using volatility and time decay as allies, we turn uncertainty into a structured, repeatable system. This is how trading evolves rum speculation into a reliable profit generation process. We hope you find this video informative and useful. Please give us a thumbs up and subscribe to this channel for anytime access to this and other videos. As a subscriber, you can request private videos or playlists by emailing us at qeinvesting@gmail.com. That's all for today. Thanks for watching and catch you in the next one.